Welcome back. Welcome back. We are going to do part two of chapter 15. Previously, we talked about advertising objectives and creating messaging, and now we want to shift gears just a little bit and talk about the strategies that we have in terms of selecting the media. And so it goes without saying, a great message that has noble goals and objectives can be lost if you put the content, the ad itself, in the wrong place where it does not connect with the target market, or it's just not an effective message because it is targeting the wrong people. Now, in traditional advertising, In traditional advertising, we have this concept of reach and frequency, which historically has been the way that advertisers measure effectiveness and use as a criteria for selecting different types of media platforms. And reach is just a measure of the percentage of the people in the target market who get exposed to the ad, during the time you use the campaign. Now, that's great. That's your old-fashioned eyeballs, people sitting in front of the TV screen, and you get your Nielsen ratings, and that's all great too. Frequency is a measure of how many times an average person is exposed to it. So reach and frequency is still very important, but one of the things that we're seeing with this whole convergence in terms of using technology, especially internet and mobile, it's not just about reaching a certain percentage of the people and exposing them to your particular ad with some level of frequency. It's about the impact. And the word that people typically use when it comes to impact, it's really getting at this whole issue of engagement. How are you engaging your consumer? How is the consumer engaging with your message and your brand itself? Are they blogging about it, tweeting about it, posting it to Facebook, watching it on YouTube, making comments on YouTube, even just something very simple like retweeting your message that you're sending? That shows engagement. And so engagement is really the most important thing that marketers are looking at now, that overlay traditional reach and frequency when it comes to what medium they're going to use to connect with their consumers. Now, impact, again, when you think about impact and any kind of selection of media, you have to think about how is it going to be impactful generally. Are you going to be able to have some breakthrough of the clutter when it comes to the messaging itself relative to what others are sending out there, your competitors? How cost effective is it? Is it effective in communicating the message? And so when we decide on a particular medium, we have to say, does it have impact? Has the potential to be very effective, or does it cost a bit more than what we would normally get with another type of media? So for example, we might find that if we're trying to connect with elderly people, it's not going to be very effective to use the internet. So the medium that you should be using should be something that is in line with that particular market segment. Same thing for younger people. The internet and mobile technology and mobile access to your ads might be more effective based on their willingness and ability to interact with a particular brand using the internet. So we want to figure out, how do we get more targeted messaging to our consumers? You can argue that no matter how targeted a television program might be on a particular network, it's not a shotgun approach, but it may not be as narrow as we would like. And so sometimes you may find that getting messages to people where they're shopping, for example, might be a little bit more targeted. That's why they have those little tiny billboards on shopping carts and in some supermarkets. And so the ads that you might get on a shopping cart in Whole Foods might be very different from an ad that you might have for a product or for a store that might be more broad-based, like a Safeways or an Albertsons or something along those lines. Ads that are on shopping bags, we see that now. One of the things that I've seen Plastic bags that cover your dry cleaning are now sponsored, and they have advertisers on there. I think Capital One is one of the major ones that I've seen over recent years. Also, too, putting advertising messages related to programming. CBS has done this where they stamp messages about their upcoming TV shows on eggs. And so if you buy a dozen eggs, you'll see little ads on the eggs itself. Some people think it's a little bit too intrusive, and others are I guess, kind of fine with it. I guess I'm somewhere in the middle, actually. Now, when we're deciding on different types of media, one of the things that we need to discuss a little bit is this whole notion of seasonality. So think about seasonality as it relates to time of year. It could be time of year based on weather, summer versus winter. It could be time of year based on some holiday schedule. So for example, Christmas season, typically they've started selling and advertising leading up to Christmas, it seems like at the beginning of October. It used to be a 6 to 8 week window. And more importantly, that 4-week window between Thanksgiving and Christmas is when they really bombard us with messaging. But now it's more elongated. They start selling for advertising for Valentine's Day right after Christmas. And there's that 6-week period, basically January 2nd. Next time you take a look at your local retailer and see how quickly they change over and turn over the physical space that they have in their store from Christmas to Valentine's Day. That 6-week period, they're usually done that second week of January. They're done changing over the physical space, and you start seeing the ads as well. So seasonality is very important. There's also a pattern. The two common patterns that you would see is one which is a pattern of consistency or continuity. So for example, if you said we want to run 52 ads in a given week, continuity would be you'd have that ad running each week for 52 weeks. Now, what is becoming more popular based on things like seasonality is that companies and brands are using what we call this pulsing kind of scheduling, where essentially they said, I think I mentioned this before, where I said basically there's a 6-week period where you have to look at Valentine's Day as an opportunity to communicate with potential flower buyers and candy buyers and so on. And so what they'll do is they'll take that particular advertising and pulse it, meaning they'll just keep it and concentrate it into that 1 month or 6-week period. Or you may find that if you are selling tents for outdoor activity, you may pulse in certain regions where it's nice weather year-round, where people can actually go and camp pretty much 12 months out of the year. Very different from what you would do if you were looking at let's say, the Midwestern portion of the country. Go to Minnesota. Camping, you pretty much have about a 3-month window where people engage in that kind of activity. So again, pulsing is really more concentrating it based on behavior, seasonality, versus continuity is sort of like streaming it out and spreading it out consistently over the course of a period of time. And the example I gave, it's a period of time equaling 12 months or a year. So the most important thing that when you decide to spend your money as a marketer, you want to know, are you getting the right return from your investment? And it's the same metric that you would have based on any other kind of investment. You look at the revenue that's generated by the invested cost. And so depending on how much money you're spending, you may have in your mind a certain rate of return that could be based on what competitors get in your view, or what you have historically gotten in terms of the sales that are generated by a certain level of investment of advertising. And so generally we're looking at it in the context of more communication effects as well as sales and profit effects. And communication is the messaging getting out there? Are they changing their behavior or changing their minds? And the only way, from an experimental standpoint, where you can see whether or not there is any impact or effect is to have some sort of test before and a measurement after. So you might, for example, know what your sales were on a month-to-month basis or quarter-to-quarter basis, and you introduce a new advertising campaign. You look at the averages and say, on average, we have $1 million per month in this 3-month period of time in a given year. And after you introduce this, what we would call stimulus, this ad itself, you might find that now your sales are 1.1. And so then the assumption then is that additional 10%, that additional $100,000 worth of sales were generated as a result of the introduction of this advertising investment. And again, they're looking at that number. We would look at how much did it cost us to generate that additional $100,000, and that will tell us what the return on that particular investment would be. Another consideration or question that every organization has to answer is, do we want to do our advertising internally, or do we want to outsource it? So the larger the company, the odds are you're probably outsourcing. And so when we say ad agencies, we're talking about the companies that we see on Mad Men, the TV show. They exclusively get involved in advertising. Now, one of the trends that we're seeing in advertising in the last 10 years or so, you have these advertising shops. Some of them specialize in digital related advertising. And then you have others that are non-digital, or what we would call traditional old school types of advertising. So television, radio, print, and then you might have a shop that does mainly online advertising, mobile advertising. But we're seeing some convergence where what they're really understanding is that you have to be a jack of all trades and be able to offer your clients expertise in all forms and formats of media. And so the answer should be, if we cannot do it internally, let's outsource it. If we do outsource it, is there a specialization that we need? If we're primarily focusing and using more what we would call 21st century types of advertising through the internet and through mobile devices, we may want to get a mobile internet specialist. If we're doing more old-fashioned traditional stuff, we may want to get someone who specializes in traditional television, print, and radio. Same thing with international advertising. It really depends on your level of expertise internally, but by and large, the bottom line is internal and external. You have to realize you cannot take the same message and the execution of the message and put it into a local environment in Europe or in Asia and expect the same results. So it has to be customized based on culture and traditions, where you have an opportunity to achieve whatever the goals are that you're looking at. Public relations. I've mentioned this before. Public relations generally is more of a reactive type of discipline. People who work in public relations typically are your communications people who study communications in college. Traditionally, advertising is more of a communications discipline. Marketers tend to do more of the promotion stuff. And so there's still some overlap and convergence as well. But generally, PR people are there because they're trying to promote new products, new ideas, certain activities. They're there really to put a face on the brand and the company itself. Many times what they'll do is they'll actually hire a PR firm, just like they did in terms of outsourcing potentially. They might get a PR firm, somebody who specializes in public relations for banks. If you happen to be Bank America, maybe that's where you should go. Or someone who does really good PR, and they're really great with technology companies because they have clients like Apple and Hewlett Packard and IBM and so on. But these public relations people, they get involved in writing press releases. They get publicity. Again, publicity meaning contrasting free versus paid. Publicity generally means that you get someone to write a story about your product, get someone to interview an executive at your organization, to sell them on this new great, latest, greatest, innovative kind of product that you have. And so they're really there to really put a public face on a particular product or a service, and in a way where they don't have to pay any money for it, which is really the important point there. They also get involved in lobbying. Lobbying is something that is very important in industries that are more highly regulated. So you want to make sure that you have somebody at your state legislatures around the country, as well as in Washington, who are basically lobbying, meaning trying to persuade in your best interest. And they get paid an awful lot of money. Lobbyists generally are very specialized, Just like many consultants, if you want a lobbyist and you happen to be a tobacco company, you get a tobacco lobbyist. If you are a technology company, you get a technology-based lobbyist. Investor relations, that's really communicating generally with what we would call financial stakeholders. So you talk to the people who follow your stock if you're a publicly traded company. You talk to and engage with people who are in the business potentially of lending you money, or people who potentially want to invest in your particular stock if you're a public company again. So it could be people who run pension funds or people who run mutual funds who invest and trade in different stocks. And so you want to make sure they have the most up-to-date information to have a fair opinion. And they write reports. And so sometimes these reports can carry over outside of the investment community. So when negative stories, especially negative stories, when they're picked up by CNN and Fox and some of the others that people on a regular basis will watch, it's not just the investment community that sees it. It's everyday people who actually go out and buy physical products in stores and the like. Development is a concept that you typically will see for a university or a hospital or other kinds of nonprofits. They're there to get volunteers, but also, too, most importantly, to raise money for an organization. So the role of public relations relative to advertising, obviously it's lower cost. But the key point there is that you want to make sure that you have them work in concert with everybody else who is putting messaging out there. Again, getting to the integrated marketing communication thing that we talked about before. And so having public relations know exactly what others are saying about their product or service, it's a great way to make sure IMC is happening with some regularity and effectiveness. And finally, some of the major tools that people in PR usually use. Apple is great for having these launch press conferences, very elaborate press conferences. Steve Jobs, and usually it's the CEO, Steve Jobs used to be great at working the crowd and introducing the latest and the greatest technology, be it the newest iPhone version or the iPad or whatever the product might be, getting in front of a large audience, mainly trade people who write for trade magazines, potential investors, people who work in the media, who cover technology companies. It's your opportunity, and it's free. All you got to do is put on the show and maybe buy them a meal. But it's an opportunity for you to put your best foot forward and tell them what new product is coming to market and why you believe people should buy it. They get involved in obviously what's going on in social networking and internet. Again, somewhat proactive, but mainly reactive. So you want to keep an eye on the chatter that's going on the social networks. You want to know what people are saying about you on Twitter or on Facebook. And you want to have somebody respond to the negative stuff in a timely manner. They get involved, obviously, press releases, other special events, public service activities. So any activity that you do where you're giving back to the community, you want to make sure that the public becomes aware of it through press releases and maybe even some formal types of events. For example, most people know that Target has an ongoing effort to help raise money for schools within communities that they do business in. And so typically a couple of times a year, they will send out a press release that talks about the effectiveness and the amount of money that they're generating through their sales that go back to those efforts and endeavors. So again, these are just some examples. So that wraps up the chapter on advertising and public relations. So I'll see you in the next chapter.